financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. We got a good show lined up for you this week. A very, very good shoe. And we're going to be talking about, as you can see from the title of today's podcast, 4 signs of America's economic decline. 2020 has really brought this into crystal clear focus that the United States of America, as we have been saying year after year after year, is facing bankruptcy. It is a bankrupt country. It does not have the money to pay for what it has promised. And this, of course, is very clear when you look at the national debt, or if you look at the promises and the entitlement benefits that we have, the unfunded obligations that America is on the hook for. It simply does not have the money. And America operates with a real funny kind of idea that it can grow itself out of its debt loads. So it literally lives off of a debt-based monetary system and thinks that it can actually escape the cycles of history by growing quick enough. The problem is that the United States is not growing quick enough to outpace the amount of money that it's spending. In fact, if you look at the national debt growth on an annual basis, you'll find that it's far higher than the growth of the GDP, right, of the actual economic output. So in essence, what we have here is we have debt growth outpacing sheer economic growth. And that's just clearly unsustainable. It's not going to work. And that's what we put in our book, Bankruptcy of Our Nation. And it was interesting. Last week, I was reading a story someone had sent to me in Market Watch, and someone had sent me an email and just said, Ray Dalio has been reading your book. Ray Dalio, for those who aren't familiar, he's a veteran hedge fund manager. I don't know if he's read my book or not. Our book has been around for years, but I do know that Ray Dalio is kind of singing the same song. He is, again, the largest hedge fund manager here in the United States, runs Bridgewater Capital. And Ray Dalio, in fact, we'll put a link to this article in our show notes today. But as the founder of Bridgewater Associates, the world's largest hedge fund firm, he's a billionaire, and he sees the writing on the wall. He has pointed out in this interview here in Market Watch that America is a 75-year-old empire and is exhibiting signs of decline. So a fella who is, benefited from Wall Street and has built the largest hedge fund company in the world, or in the United States at least, is now telling us that the system that has enriched him and that has enriched, Wall Street is broken. He also comments that wealth cannot be created by creating debt and money. He has another comment here that says within the next 5 years, you could see a situation in which foreigners who have been lending money to the United States won't want to. I mean, this is exactly what we talked about in our book, Bankruptcy of Our Nation. This is exactly what we've been saying here on this podcast for so many years. And so today, instead of belaboring this article here on Market Watch with Ray Dalio, I just simply want to move into 4 signs that we can see very clearly that point to the fact that America is suffering economic decline. And the very first one that I would point you to, point number 1 or sign number 1, is America's debt-based monetary system. This was alluded to by Mr. Dalio in this article about how you can't create wealth by using debt-based money. And we abolished the gold standard many years ago. You may be familiar with that story. We talk about that story in our book, Bankruptcy of Our Nation. By the way, we're giving away a copy of the audio book version of Bankruptcy of Our Nation at the end of this segment, so stick around. And we'll have details on how you can get a free copy of Bankruptcy of Our Nation audiobook that you can listen to. But as I point out in the book, there is a chapter where I talk about the golden permission slip. And in essence, what we had for a long period of time was that the dollar was backed up by gold. And that system broke down because when you back your currency with gold, what you do is it serves as a restraint or a constraint against excessive amounts of printing. So if you only have so much gold, then you can only print so much paper money based upon that gold. And this is why you'll see in history the mercantilist system was very popular, where if you wanted to grow your economy, what did you do? Well, you got on a ship and you went across the sea and you found some country to plunder. You took their gold, you brought it back to your country, and now you can create a bigger economy because everything's based upon the amount of gold that you have in store. And so the mercantilist system, of course, was popular. That fell apart. And now we have a system that we've slowly seen the erosion of any kind of backing for the currency. And so now we are living in a time that is an anomaly throughout all of history. I think this should not be lost upon the listener and those who are literally trying to invest in this kind of environment. We live in an anomaly, right? You can't find too many other times throughout history where the economic hubris has been so high as to believe that you could literally just create money out of something that doesn't even have utility even of itself, no intrinsic value, piece of paper, literally a piece of paper that has no intrinsic value whatsoever becomes the money system that we have. And there's no backing. This is fundamentally an unjust weight, a dishonest balance. This is what the Bible talks about. In fact, it rails against this kind of type of money system that we have today. And again, don't expect to hear that from too many churches or pulpits, but it's the truth. The Bible talks about usury as a negative thing. And in fact, if you look at the book of Nehemiah, you'll find that the interest rate that it calls usury is 1%. So that's not like excessive interest or anything. Usury in general is pretty much forbidden, except for very minor exceptions in the Bible. And so it's interesting that today we have this system that is built entirely upon usury, right? It's built entirely upon, and for those who aren't familiar with usury, had you been alive 500 years ago, you would know what it is. It's gone away from our vernacular now. It just means interest. It means the charging of interest. And that, of course, is what the entire system is built upon. Even the dollar in your pocket is a Federal Reserve note. It is no longer a silver certificate or some other kind of item with intrinsic value. Instead, it is a Federal Reserve note. And as we've stated many times, if you have a car note, what does that mean? It means you have a car loan, right? So if you have a Federal Reserve note, well, what do you have? Well, you have a Federal Reserve loan. The dollar is a loan from the Federal Reserve. That's what it is. And guess who has to pay it back? Somebody has to pay it back. And guess what? They have to pay it back with interest. Who sets the interest rate on what the Fed gets paid? The Fed sets the interest rate on what the Fed gets paid. All right? It's all a big shell game. And America's debt-based monetary system is not only problematic, not only is it leading to systemic problems here across our economy, but it's also fundamentally, at its most basic level, immoral. And for those who believe the Bible, or for those who hold to a biblical worldview, that is a big problem, right? We have a big debt-based monetary system here. If you're looking at America's economic decline, you would have to put that near the top as one of the major signs that we are living now in the time of economic decline for the United States. Big debt-based monetary system. Everything is rooted in debt. The foundations of our system is usury. Okay, so that's point number one, or sign number one, that we're living in a time of great economic decline here in the United States, America's debt-based monetary system. The second sign that we can see that's very obvious is the systematic destruction of the United States dollar. In fact, if you've been paying any attention at all to the Federal Reserve in recent weeks, you know that they have pretty much gone full throttle, admitting that they're trying to stoke inflation. Well, that's pretty clear because they've been printing money like drunken sailors, right? $1.4 billion an hour is what global central banks are printing. And so we are just seeing an incredible amount of money being printed. with hardly any restraint. And the Federal Reserve has admitted that that has done a little bit to stave off some of the economic problems, but they admit that it's not really going to solve everything. And so they have also stated that in addition to driving interest rates down to practically zero, and also by pumping in tremendous amounts of fresh money or currency, if you will, into the system, that they are intent upon seeing the general price level of things go up. Well, they're certainly getting that. They're certainly going to get that. But they track a special funny number they call official inflation, CPI. And of course, when you look at the components of the CPI, you won't find things that really go up with a great amount of acceleration. They don't include college costs, for example, in that. Are those going down? How about medical costs? Are we seeing any inflation at the grocery store? I mean, so in other words, we are seeing inflation, but in this real cherry-picked kind of figure that the Federal Reserve likes to look at. They say, where's the inflation? We're not getting any. Well, we all know that the cost of everything is going up. In fact, if you want to find out how much your dollar has been destroyed, just get yourself in front of a television and go back and watch a 1950s TV sitcom or something, or a TV show. In fact, it's one of the things we recently did. Me and my sons, we were watching an old Andy Griffith. We were also watching an old Dennis the Menace. These are all from the 1950s, 1960s, and you hear the prices of things, and it's good for your children to hear this. They need to know that quarter that they put into their piggy bank used to buy a whole bunch, right? Somebody's debauching their currency. Somebody is destroying the value of their currency. And that's important for our children to know because they're inheriting this world. They're the ones who have to come up in this world. They have to learn all the hard lessons that we have had to learn. And one of the hard lessons is the fact that if you take a dollar bill and you sit it on a table and you walk away for 10 years and you come back, that dollar does not buy what it used to buy. Right? That's devastating. That is a terrible, immoral kind of system that is slowly eroding the value of our dollar. And it's no longer even hidden. I mean, the Federal Reserve, as I recently mentioned, has stated openly that they are trying to debauch the U.S. dollar. They are trying to get it to be worth less so that they can then say we've done something good, right? That is their stated policy, is to drive down the value of the United States dollar for you to help you lose your purchasing power. And then they'll say, yay, we accomplished our goal. Well, that's ridiculous. That's an insane goal to destroy my purchasing power and call that good for the overall economy. That's a broken system. That's an immoral system. So the systematic destruction of the U.S. dollar is ongoing right before our very eyes. We've also seen the biggest Wall Street bailout in world history, and there's been very little said about it to criticize it. You saw pretty much both sides of the aisle say, well, we don't have a solution that we can find in the free market. There's no free market solution to COVID-19 or to address the situation that we're in. And so the only solution that they had was bailout, right? That's the only thing that they know. That's the only thing that they know to do. That's the system that we're in, is that the only solution from the free market types is socialism. That's it. They offer no other solution. Was there any other solution in the wake of the market crash back in March? No, it was instantly just take taxpayer money and give it to businesses. Just give it to people. Just give handouts, right? Because what else are we supposed to do? Well, look, if you didn't walk around saying that we shouldn't hand out money every other day of the week, well, then you wouldn't really be to blame. But if your whole mantra and your whole political philosophy is that you give money away to people and it creates disincentives, and then your only solution when you run into a major problem is to do that, well, then you lose all credibility, right? Nobody believes the free marketers anymore. I mean, who believes we have a free market here, right? It's absurd. I mean, it's absolutely absurd. Who believes this? On top of all of this, interest rates at 0%, practically at 0%. And they plan on leaving interest rates, the Fed says, at 0% for a long time. In fact, if you look at some figures in the futures market, for example, Eurodollar futures, you'll see that the futures market isn't expecting a 25 basis point rate hike until sometime in mid-2024, right? So what kind of economy do you have that can't handle a 1% interest rate? I mean, how fragile is your economy if you can't handle a 2 or 3 or 4 or 5% interest rate. I mean, how sick is your economy? The average interest rate, if you go back for the last 30 years, you'll see is somewhere around 5 or 6%. 5.67%, I think, is the number I came up with when I did an average of all the different interest rate regimes we've lived under over the past 30 or 40 years. It comes out to like 5.6%. Can you imagine if the Federal Reserve said, what we're going to do? We're just going to move the interest rate level back to where, the average level that it's been over the last 40 years. That would be 5.6%. The entire United States economy would implode. It would explode. It would be in total turmoil if what? If we simply moved interest rates back to the average level that they've been at for the last 40 years. How is that the greatest economy ever? How is that a good economy? How is that a resilient economy? How is that a resurgent? This is a sick, dying, declining economy that cannot even handle a 1% interest rate. Do we know how sick this economy is? Do we not know what's going on? How can we believe these politicians who keep telling us that everything is fine when in fact we know from evidence that the economy can't even handle a 1% interest rate? It'll crash the economy. You got to be kidding. What kind of absurd economy is this? Absolute economic decline that we're in. Your purchasing power is being debauched right in front of your eyes. A systematic destruction of the U.S. dollar. Sign number 2 that America is facing economic decline. How about sign number 3? Sign number 3 is the Federal Reserve, the central bank here in the United States that oversees the monetary system along with the U.S. Treasury, practically has no accountability. I mean, we have scandals galore happening in our banking industry here in the United States. In fact, there was just another report put out about this topic. We've had numerous reports about how many scandals have been plaguing the U.S. banking industry for years, right? We've known about this. It's very common. We know that the banks are doing all kinds of crazy things with our money. Well, there's another leaked big document leak that came out involving about $2 trillion, that's with a T, of transactions that show that the world's biggest banks have allowed criminals to move dirty money around the world. These were leaks from the U.S. Financial Crimes Enforcement Network, known as FinCEN. And I'm reading a report here from the BBC that just kind of gives some of the takeaways from what was inside this leak. And not all of these are U.S. banks, but some of them are. For example, HSBC allowed fraudsters to move millions of dollars of stolen money around the world even after it learned from U.S. investigators that the scheme was a scam. JP Morgan allowed a company to move more than $1 billion through a London account without knowing who owned it. The bank later discovered the company was probably owned by a mobster on the FBI's 10 most wanted list. You got Barclays Bank involved in these kinds of schemes. You have Deutsche Bank, which is just one of the worst offenders in this area, moving money around from money launderers, dirty money, organized crime, terrorism, drug trafficking. I mean, you got a lot of banks here that are supposedly being watched over. Supposedly there's some sort of accountability, and they keep telling us here in the public, they keep saying, Bitcoin is being used by criminals and terrorists, and so we have to crack down. Well, how about cracking down on your banks? I mean, they're the ones facilitating terrorist financing. They're the ones who are, literally, how much has the U.S. dollar been used to prop up all of these illegal schemes? The dollar is used much more for illicit crimes and activities and using these big banks than Bitcoin. I mean, give me a break. So the U.S. dollar, of course, is being destroyed, and there's no accountability of the Federal Reserve. Very little accountability. In fact, every time the Fed comes before the Congress, we keep hearing about how it's a separate entity, it's an independent organization, and blah, blah, blah. But there's really no oversight. And in fact, the few times there have been attempts to have oversight of the Fed, they've failed. I have a chapter in my book, Bankruptcy of Our Nation, called How America Lost the Revolutionary War. People say, what do you mean? America won the Revolutionary War, Jerry. Did you not read that part in history? Well, maybe they did with their guns, but the hope of keeping a central bank at bay failed, right? The first Bank of the United States came in, and then we had the second Bank of the United States, the free banking era. And then in 1913, we had the creation of the creature from Jekyll Island, as our friend G. Edward Griffin has called it. And that's what we have now, the Federal Reserve, which is morphed and grown over time since 1913, along with the installation of the income tax amendment that allows now people to pay their taxes without ever having to write a check. How friendly and nice of them. So you don't have to write that check for your taxes. So we have no accountability over the Fed, hardly any at all. You got scandals galore going on in the banking industry, and the people who are supposed to be watching the banks and regulating the banks, where are they, right? What's going on here? All the shell games that are being played. You got foreign banking interests that have totally crossed the border, and now they are, of course, majorly involved in our own system here. We found this out, of course, back in the 2008 economic crisis with the banking scandals that were going on then, finding out that the foreign banking interests, have as much say, if not more, than our own banking system here in the United States. It's absolutely incredible. And then, of course, you have a rush for deregulation, want to deregulate banking activity to make it a little easier on the banksters to, take your money. And so we've been seeing this big rush for deregulation underneath the Trump administration. It's a tired pattern. It always leads to excess. And then they have to go back in and they have to tell people to stop. They have to go slap their hands and say, hey, stop robbing people. Then they have to put regulations on them. And then we hear about how terrible the regulations are. Oh, they're slowing down Wall Street innovation. And then, of course, they deregulate and then they screw the pooch again and everybody gets screwed. And then they turn around and say, oh, we've got to put regulations on them. They do. And then suddenly it's terrible that they did. So they have to take it's over and over and over and over again, right? It's over and over. It's so tired. It's such a tired pattern. Well, anyway, we're living through this time now of deregulation, right? So we would expect to see things get more loosey-goosey. We would expect to see, less and more lax standards. And then, of course, that's going to lead to a big crisis, as it always does. And then we'll have more regulations trying to fix it, trying to point blame, and then it'll all repeat again. So it's a big, tired scheme. So number 3, no accountability for the Fed and hardly any accountability for the banks. I mean, I know they have laws, I know they have regulations, but what do you say about these FinCEN files? We got $2 trillion of transactions where some of the world's biggest banks, including some in the United States, are, moving money around for criminals, right? Knowingly. It's absurd. It's absurd. So the fox is guarding the hen house, so to speak here. All right, so that's number 3, no accountability at the banking level. And then number 4, the fourth and final sign of America's economic decline would be an over-reliance upon credit, right? It doesn't matter where you look today. The United States gross domestic product is composed of 70% consumption. If you look at the old economics high school textbooks, you'll see that GDP, or gross domestic product, is the total economic output of a nation. And the equation that we use is C plus I plus G plus EX minus IM, right? And what that is that basically gives us an equation that is C, which is consumption, plus I, which is investment, plus G, which is government spending, plus EX minus IM, which is exports minus imports. Well, that's net exports. And when you add that whole number up, you get your GDP figure. Well, if you take that C in the equation, you'll find that composes nearly 2/3 of the total GDP. So if you took away consumption, or if you saw a decrease in consumption, GDP would begin to fall off of a cliff. And so that's why government spending kicks up to compensate for a lack of consumption or sometimes a lack of investment. That's the old Keynesian model, that government spending will step in and fill in the gaps whenever there's softness in the consumption figure or softness in the investment figure. And so we really are dependent upon consumption. But the problem is that if you look at the consumer, he's squeezed by debt at a level that he's hardly ever been. Personal debt, right? Let's look at mortgage debt, student loan debt, medical debt, credit card debt, auto loan debt. I mean, we got debt all over the place. And again, this is a system rooted in usury. Our foundations for this economic system are pure usury. So it's no wonder that credit has tied its tentacles all around us, and the debt has to be paid. So we look at federal debt, federal government debt, it's outrageous. We look at state debt. State debt loads are outrageous. Local debt. municipal debts, all-time highs, right? So we got all kinds of problems at the government level when it comes to debt. They have all these promises, they're going to do this, they're going to do that, but they don't have any money. And then you got corporate debt, which is also off the charts. And you would expect that the Federal Reserve would say, hey, well, this is a problem. We got way too much debt, but instead what they do is they say, we don't really have enough debt, do we? Let's lower the interest rate and encourage more people to get into debt. So when you lower interest rates, what does that do? Does that cause a demand for credit to go up? Or does it cause the demand for credit to go down? Well, clearly, it causes the demand to go up. Because if the price of money goes down, the interest rate is the price of money. If the price of money goes down, then what? Then people want to borrow. It becomes cheaper to borrow. So businesses are going to be more likely to borrow. Corporations, federal government, state, local, municipalities, more mortgages, more student loan debt, more medical debt, more credit card debt, on and on and on and on. So that's what the Fed has done. They've said, hey, let's lower interest rates to get people to do what? To consume. But to consume how? To consume on credit. Well, we already have too much credit. We already have too much debt. And the Federal Reserve doesn't seem to really care about that. They just want to keep pushing this train right off of the proverbial cliff. And that seems to be where we're heading. So there you have it. 4 signs of America's economic decline. Number 1, America's debt-based monetary system, a foundation of usury for the nation. It's not a very good idea. Sign number 2, a systematic destruction of the United States dollar that's occurring in full-blown technicolor right before our eyes as the Federal Reserve continues to make incredible moves that are historic, that are total anomalies even for the Federal Reserve, and that are leading to a massive debauching of your purchasing power. Sign number 3, no accountability. And I say no, I really stress this. There's very little, if any, accountability for the Federal Reserve and its reckless actions because we don't have the political will to hold the Federal Reserve accountable, nor do we have the political will to hold all of these banks accountable that are breaking all manner of laws. And number 4, the 4th sign, is an over-reliance upon credit. I got to say, America's debt binge, I believe, is going to be its undoing. So, as I mentioned, I want to give away a copy of our book, Bankruptcy of Our Nation. Much of this information, by the way, is in here, and this is a very simple-to-read book, and it's not all filled with doom and gloom, although it does have quite a bit of that. But at the back of the book, for about the last, maybe the last 100 pages of the book, it's all about strategies. Things that you can do to protect yourself, income streams that you can create both now and in retirement. We got 21, 22 different income streams in this book with ideas. We have 8 key strategies to protect your finances in this book. We have several different investing strategies as well in this book. And I tell you, reading the book is great, but what's even better is when somebody reads it to you. And so if you haven't heard the audiobook version of Bankruptcy of Our Nation, that's what we're giving away today. Now, how do you get a copy of it? Very simple. Just a little quick test. All you got to do is send your answer to info@followthemoney.com. Email us an answer to this question. What year did President Richard M. Nixon take the United States dollar off of the gold standard? When did he suspend convertibility of the U.S. dollar into gold? What year? All you got to do is type in that year, that number, and send it right to us by email, info@followthemoney.com. And we will get all of those correct and hopefully correct responses. And then we will take those and we will pick one at random and contact you right back by email and let you know that you are the winner of that audiobook. And we'll deliver that as well to you right to your email. So use the email that you'll be most apt to respond to. Best of luck to each of you in that contest. And I hope that this information has been helpful to you in today's podcast.
Are you prepared for the next stock market crash? It's not too late to protect yourself and your family with Jerry Robinson's best-selling book, Bankruptcy of Our Nation, now in a new audiobook format. Whether you want to listen in the car, at the gym, or on your iPad, we've got you covered. Get the entire 300-page book in audio format for only $24.95. That's over 12 hours of Jerry Robinson's economic wisdom, financial insights, and practical money-making strategies for only $24.95. Inside this new audiobook, you'll learn 21 profitable income streams you can create both now and in retirement, along with unique tips on how to inflation-proof your investment portfolio using our own PACE philosophy. And our 5 levels of financial freedom, which is Jerry Robinson's personal blueprint for building true wealth. If your goal is to become a better investor, increase your income, or just understand what is really happening in the global economy, you cannot afford to miss out on the vital information that is jam-packed into this 12-hour audio book. Get instant access to Bankruptcy of Our Nation in audio format right now by going online to www.ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy. Download your copy today and get on the fast track to true wealth and a lifetime of financial security.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, that brings us to the end of our broadcast. And as always, I like to leave you with a final word. This time, it's an old quote by a very famous author, Charles Dickens, when he wrote, "No one is useless in this world who lightens the burdens of another." It's a really powerful quote, and it reminds us that those of us who have it within our power to give and to help others and to lift others up, especially in this time of great economic need, well, it's incumbent upon us. And one of the ways that we help you in that area is by providing you with a very powerful charitable giving plan worksheet. We believe that everyone who is beginning a plan towards financial success or financial freedom should front load that plan by remembering the power of money and remembering the power that money can wield over us if we don't have it in control. In other words, money is a wonderful slave, but is a terrible master. If you want to download our completely free charitable giving plan worksheet, just go to followthemoney.com/giving. There you'll find a video and a downloadable PDF that'll help you when it comes to giving and including that in your overall financial plan. Remember, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week. We'll see you right back here next time. Until then, God bless.
The information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.